Hey everyone, it's Shelly Killinger here from the Shelly Killinger Group at RE/MAX CSI. So it's that time of year again, it is tax time, and today we're talking about 3 areas where you can benefit on your taxes from purchasing or owning real estate. So everyone talks about the tax benefits of owning real estate, but what truly are the biggest advantages to owning a home in regards to your taxes? But before we dive into this, I should put a disclaimer out there that we are not tax preparers, so we are not able to give you advice on your individual situation. If you want to discuss how the purchase of real estate could impact your taxes personally, your tax preparer would be the best person to turn to. So the first and most commonly asked about tax benefit is the mortgage interest deduction. So the mortgage interest deduction allows you to deduct the mortgage interest that you pay during the year on your taxes. There was actually a change to this section of the tax framework this year, and if you want more information on the changes that took place in the tax reform, head over to our YouTube channel and check out our tax reform video. Under the new framework, however, you are able to write off your mortgage interest that you pay on your home on actually your first and second homes as long as your mortgaged amount does not exceed the $750,000 mark. This can make a pretty big difference, especially if you live in a high tax area. The second tax benefit of owning real estate is what we call PMI, or privatized mortgage insurance. PMI is an insurance premium that buyers pay monthly as a portion of their mortgage payment when they don't have at least 20% equity in the home. Those monthly premiums that the buyer pays are actually tax deductible, and with some PMI payments adding up to as much as $100 or $150 a month, that can end up being a nice deduction. The third benefit to owning real estate is what we call SALT, or your state and local tax deduction. So under the new tax framework, the government permits homeowners to deduct their state and local taxes, which does include your property taxes, up to a cap of $10,000. Obviously, if your taxes come in anywhere near that $10,000 mark, that makes a pretty sizable deduction, which equals more money in your pocket. The last deduction that we're going to mention here today only applies if you purchased a home using lender points. So if you're unfamiliar with points, some lenders permit buyers to buy down their interest rate by paying an upfront fee. Points can sometimes cost as much as 1% of the entire loan amount, so it could end up being a nice size deduction to help keep more money in your pocket. Points are not always deductible, however, so be sure to contact your tax preparer to determine what is the best for your individual situation. So those are our quick tax benefits of purchasing and owning real estate. Thank you so much for watching. Please do remember to subscribe to our channel so that you don't miss out on our market updates and our weekly real estate videos. Thanks again, guys. See you next time.